Let's talk to Alex. He's in Stouffville. Good afternoon.
Hey, thanks for taking my call.
You're welcome.
Hi, David.
Hi, Alex.
Just a question on Magna International on the Toronto Exchange. I think I saw it was on your one of your key holdings in your portfolio, I was wondering how the I think figures came out today that auto sales in China are 16% higher than expected. I was wondering how, if that was going to have a significant impact for Magna, and your thoughts on the stock from now going forward. I noticed it had a bit of weakness short term. Yeah, thank you.
All right,
I'll hang
thanks,
up and
Alex.
listen.
Okay, Alex, so you're correct. Magna would be one of our top 10 positions at the firm. As a Canadian manager, we need to have certainly some Canadian names. We don't really look at Magna as being a Canadian company. You're basically buying exposure to the auto industry globally. And so by nature, you're buying the consumer globally. And as we mentioned earlier, I think that one of the biggest winners from low energy prices is the consumer. And Magna sells their gear into auto manufacturers in 29 countries around the world. The U.S. is about 50%. So it is a beneficiary of the auto industry's growth. So we really like the auto industry, and certainly China is an important part. It's a smaller part, but it's growing more rapidly. Magna's done a great job. They beat the most recent estimate by 12%. We own Magna, we own BMW, we own Toyota, we own Linamar here in Canada. So this is one of our core themes, and I think Magna is a great way to participate in it.
Are we late cycle in the auto sector right now, or is there more to go?
We think that there's room. We think actually, if you look at the economic data in the U.S., it tends to be that the job growth and the economic surprises that come as a result of low energy prices tend to take 6 to 8 months to start working their way into the economy, and we don't think that's really even begun yet. So we think over the next 12 to 16 months, you're going to see upside surprise to U.S. economic data, probably starting in the next month or two. And it probably will also happen. It is happening as it is right now in Europe. So we think there's a lot of companies going to benefit from that. Magna's one of them.
We have Bill on the line in Montreal. Hi, Bill.
Good afternoon. Can I have your guest's opinion on Trinidad drilling? Is this a good entry point? Thank you.
Okay. So, Bill, one of the questions we get a lot is it time to buy energy yet? And whether you're talking about drillers or service companies or producers, it's a question on a lot of Canadians' minds because it's an important sector in Canada. One of the biggest risks in investing is getting caught looking backwards. And from 2000 through 2012, commodities and energy as one of the parts of the commodities market were a big beneficiary of what was going on. I think that they are now in a space that is going to be more difficult. So I would be very careful. I think that there's a lot of oil companies trading at prices that they should trade at if oil was $70 a barrel. I think there's a real risk actually that this rally is going to fail and that the oil could go back to $40 or below. The first thing that producers will do is they will cut more of their new development. And so for the drillers, they are the most at risk. So I think that there's more risk for services companies. I'd be very careful. I'm not saying that Trinidad isn't a good company. It's just they're in the wrong space.
So do you disagree with what seems to be the consensus that energy prices will improve mid-year after all this cutting flows through?
We disagree for a couple of reasons. First of all, the sector has raised an enormous amount of capital, and company by company on an individual basis, they want to make use of it. The second thing is that we are no longer in a world where you drilled a hole 5 years ago and had a 50% chance of success. Today you drill a hole with 3D seismic and fracking, you've got very close to 100% chance of success. So we are now at a point where they've built lots of equipment to supply the boom. There's lots of people who have been trained as to how to use it. And there's almost certainty in finding it if you decide to turn it on. So the fact that companies may slow down their work, if prices rise even marginally above the cost of production, it's hard to see how the supply response doesn't come immediately. So I'd compare energy today to where fiber was in 1999. The boom in demand was finally met by supply, and there was never pricing power again. So in the near term, we think that energy has a real challenge, and bottom fishing in last year's theme can be problematic.
Let's talk to Brian, who is in Thunder Bay. Hi there, Brian.
Hello there. Thank you so much for taking my call.
You're welcome.
As a newbie to the stock market, this show is, I love it.
Great.
Anyways, I'm looking for your speaker's views on Canadian railway companies, Canadian Pacific in particular. I really like that company's strengths, and I'm looking for your speaker's views on going forward with it. I'll hang up and listen to what he has to say. Thank you so much.
All right, thanks for the call, Brian.
So, Brian, CP has some pluses and minuses. The minuses that people would point to immediately are that a lot of the railway companies in North America have benefited from the boom in moving energy around, and that may slow down a little bit. When you look at CP, what's interesting is that the majority of their network is north-south. So they really connect Canada all the way down to Mexico, ultimately, through some of their partners. And so it becomes a much more North American-centric railroad. And I would argue that the pickup in the domestic economies in the U.S. will add additional freight. CP, I think, can benefit from lumber. Historically, lumber was a big part of what they moved. The housing industry, we believe, will pick up over the next year, and so there'll be a pickup in traffic in lumber. And on the other side, the cost of energy is lower than it has been. So I think that there are certainly some challenges to the railroads, but we do have exposure to CN, CP, and United Pacific in the U.S.
Okay, UNP in the States. Let's take another break here with David, and we'll get back to your question. Stay tuned.